You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 8th of May, 2017. Everything is up for the day. The S&P 500, the QQQ, which is, of course, the NASDAQ 100 TLT, which is a 20-year Treasury bond fund, and gold. That is up for the day. Let's go first to the S&P 500. Check out the weekly chart. We've now closed out with 2 weeks of solid up movement on the S&P. We have broken through, of course, at the beginning of the prior week, ending on the Friday the 28th of April. It busted through the downtrend line on the S&P 500 weekly trend after we had that weekly vertical crossover going down back on the 31st of March. And the last 2 weeks, strong up movement, derivative oscillator losing down energy. Has not crossed over yet, so we don't have a weekly vertical crossover, but it appears to be getting closer and closer. If we look a little bit closer in, however, we can see that, yes, we did finally move above that 139 level or so. Actually ended the day, well, we ended the day actually at 139. It has been hitting its head, I'm sorry, 239. I keep saying 139. $239. It keeps hitting its head there, which is interesting to watch. We do see steam continuing to build. The derivative oscillator gaining energy, the PPO, the price percent oscillator, continuing to move up. But when it was banging its head at 239, it has been interesting to see that all the way back, hell, it was at 239 all the way back on the 25th, the 2-day candle ending on the Tuesday, the 25th of April. So really throughout the course of the entire week, the market stayed at a high of about 239. I did have a higher high over the course of the day on Friday, up to, well, 239.72, not that high. So it is interesting, but we do see that our indicators are showing it continuing to move up, and we're seeing that on the weekly. But just be aware that it is topping out at around $239, and it's going to need to really spike up above that, although we see the Bollinger Bands opening up, giving it more room. So we'll continue to watch, but who knows how long the legs are on this market. We're keeping our eyes open, my friends, over the course of this next week. Let's move now to the Qs. QQQ, the NASDAQ 100. It did cross over at the end of last week on the 28th. That is the 28th of April. We had a weekly vertical crossover. If you're on our text list for that, you got that notification and, of course, had a chance to jump in on Monday on the real action and watch that market go up. If you're not on our text list, you can get on that by simply texting to the number 33222, the word Charting Wealth, one word, Charting Wealth. Text that to the number 33222. Okay, let's look at what went on. Well, we're going to check out the 30-minute chart in just a second, just to show you where we jumped in, but we're going to look at what happened on the 2-day chart. We saw the market ending on that second day of the 2-day candle. We saw continued up movement on Monday, followed by more up movement on that 2-day chart ending on Wednesday. And the 2-day chart ending on Friday was sort of a mixed bag, an open box red candle with a wick on top. And again, we're also seeing some stalling in the NASDAQ 100. Of course, it's just not continuing to move up. It topped out. The high was 137.49, 137.43 on that 2-day candle ending on Friday, and 1738 on Monday. So again, we're seeing some topping throughout the course of the week. And of course, we're seeing a flattening on that 2-day chart on the Qs. Still moving up on the PPO, but flattening, and the derivative oscillator still gaining energy. So we'll continue to pay attention to our indicators, but that price movement's interesting. Also, the price movement had opened breaking through that strong up movement with the past 4, well, really 5 candles, 8 days of strong up movement. The last 2-day candle was not that strong. So again, Some caution on the stocks. Are they topping out? Now let's look at that 30-minute chart just so those of you who did not jump in can see where we were looking to jump in with that weekly vertical crossover over the last week. Now, of course, the week started on Monday after that weekly vertical crossover. We say wait for idiot hour to end around 10:30. Of course, the opening at 10:30 was 136.23. And of course, we've hit all the way up to a high of 137.40. So again, things are looking good on that, but continue to pay attention whether this market is topping out or not. We just want to be careful, always careful. Remember, we just had that quick turnaround on the Qs. If we go back and take a look at our weekly chart, if you all remember, we had a weekly vertical crossover going down on the Qs, and then 2 weeks later, we had it switch back on us. That does not make us feel good. First, with the loss, and second, with the fact that it turned right around and popped up, and now we're seeing it banging its head around that 137 mark. So again, just be cognizant of that. Pay attention over the course of this next week. That shouldn't have kept you out of jumping in to that crossover going up on the Qs. Okay, we're back to the weekly chart. We're going to the 20-year bond fund. What do we see? Well, remember, 20-year bonds crossed over going up back on February the 3rd. That was on Friday, February the 3rd. And of course, we saw those bonds go up some, slide sideways, drop off, and then start rocketing up around the 24th of March. And they topped off around the 21st of April. And then we've had the last 2 weeks of down movement, a spinning top, lots of indecision that first week ending on the 28th of April. And then over the course of this last week, pretty strong down movement. When we look at our 2-day chart, of course, we had a 2-day vertical crossover back on Monday, the 1st of May. So we're continuing to see down movement. The week ended down, so we're not in a trade right now on TLT because of that schizophrenia between the down movement on the 2-day and the up movement on the weekly. That does not make for a good trading environment. You want both your weekly and your 2-day to be moving in the same direction. So we're waiting to see what happens. Is the down movement on the 2-day going to be strong enough to bring the weekly over going down, or is the 2-day chart going to recover and move back like it did, going in the same direction as the weekly chart like it did back on the 22nd of March that gave us a great buy-in point and some wonderful appreciation. So we will watch, wait, and see what we see. Now let's keep moving through these charts, and again, watch over the course of the next week where it's going. We'll let you know when a weekly vertical crossover occurs, if and when it does, and of course that will present the opportunity to jump back into one of these trades. People ask me, can we trade in shorter time periods? Yeah, but big charts mean big money. Little charts mean little money and lots of worry. Now let's look at our last chart, which is gold. Gold was up 0.19%. Oh, for the record, TLT, 20-year bonds up 0.09%. So gold was up 0.19% on Friday. That's the reason we have a tail on our candle. Otherwise, it would be a more solid candle. Remember, a tail always means that you had the bulls pull the down movement by the bears up. So the bears drive the market down, the bulls drive the market up. So what do we see going on? Well, we can see that we had a strong upsurge in gold when that weekly vertical crossover occurred on the week ending the 27th of January. Gold went up until about the week ending on the 3rd of March, dropped over for 2 weeks, and then started flying up starting that week ending the 24th of March, and went all the way up until the week ending the 21st of April. And we've seen 2 down weeks, and of course we saw that 2-day vertical crossover occur back on the 27th, Thursday the 27th of April. And of course we can count 5 strong down red candles and a huge down red candle for this last one that ended on Friday, the 5th of May. Now, if we delve into this a little more and look at our 4-hour chart, folks, do I not tell you the way it is when we look at that 4-hour chart about how accurate that is for crossing over? When it crossed over going down in the afternoon of the 19th of April, it has rocketed down. Since then, you can look back on that chart and back test it. That 4-hour chart is a beautiful chart for the most part. It usually tells you exactly what that market is going to do, and it at least gives you an opportunity to make some money in that. And it seems to just work over and over and over again. But look at what we see that's interesting about this 4-hour chart. It has hit a bottom, a strong bottom, starting at noon on the 4-hour chart, ending at noon on Thursday, the 4th of May. And we saw it just hit and stay there. Now, we've reached a bottom in gold, at least over the last 4-hour candles. So that's 2 days of movement. And we've seen also the Qs and the S&P 500. We've seen them hit sort of a ceiling over, well, actually, they've hit a ceiling over, what is that, from the 26th, Wednesday the 26th of April, all the way through Friday the 5th of May. They've hit a certain ceiling. We can see that also in the Qs, where they have hit a ceiling. Not quite as long in the Qs as it is in the S&P 500. In the Qs, that ceiling started on the afternoon of the Monday. So the entire past week, S&P 500, a couple of weeks. But when you start seeing a number of your charts hitting ceilings and then the inverse, remember, we typically see things inversely related. If the stock market's moving up, then gold, many times they're inversely correlated. Gold and bonds may be moving down, but we're seeing things bottom out. And I do find that very interesting, particularly looking at that gold chart on the 4-hour chart where it just sort of stopped moving down. Stocks have stopped moving up. What's going on? Is the market trying to correct? Is it slowing down, going down in the commodities, like gold, and going down in bonds? And is the stock market stopping its up movements, getting ready to reverse? Well, the stock market rarely stays stagnant for very long. Things typically are moving up or down. They don't move sideways for too long. And let's just see, particularly what we've seen lately, let's just see what's going on and pay close attention to that over the course of this next week. The topping out may mean that the stock market's getting long in the tooth and is ready for some substantial corrections. Don't know that. I'm just seeing certain things in the chart. What does the news tell us? I don't really care what the news tells me. I care what the charts tell me. The news tell me what the charts have done. The charts tell me what they're doing. So pay attention to the charts, not the media noise. The charts are not trying to sell you advertising. The media typically is. You can sure listen, but check it with the charts. My friends, that's where we are at the end of the week. Guess what I'm working on? Some interesting things. I am doing the monthly profit report for the month of April, how we did. We finished the month up 2.39%. The only thing that hurt us was that Q's trade, that bizarre correction where it dropped over and then moved back up. And otherwise, we would have been up around 6% almost. But you know what? You take your wins, you take your losses. The good thing is if you do it right, you have more wins than losses. And that's what we're all about. And I'm also working on how to use the new sheet that we created, our trade worksheet. This is how you keep up with your practice trades and how you learn your valuable lessons. I want you to be looking for that video very soon. We will be loading that up. Also, going to try to get to it this weekend. My friends, we appreciate you so much. You've made us like number 4, 5, or 6 in the world on podcasts when it comes to stock market, stock trading, and stock charts. and we so appreciate that. We, again, are going to continue to produce all the good materials that we can for you. We don't charge for any of the stuff that we do, whether it's sending you the text for the weekly vertical crossovers, whether it's posting our videos every day to YouTube, Facebook, Instagram, you name it. Same with our website. I do want to encourage you, if you want to get the materials that we have, the best way to do that is to go to chartingwealth.com, put in your first name, your email address. We will send you every day that we produce our daily videos and our weekly comprehensive review and forecast. You will get that every day the market is open as soon as we knock it out. In addition, you'll see in the show notes that you receive, the email that you receive, the layouts that we have at freestockcharts.com, freestockcharts.com. We'll send you the layout and instructions on how to get freestockcharts.com. Plus, you'll get our daily market worksheet, our weekly market worksheet, our trade worksheet, and you'll get a link to our How to Read a Stock Chart video. Plus, there at the website are all of our great training videos and all of the daily and weekly videos. Folks, we are here for you. We love to hear from you. You have questions, problems, concerns, write us, cw@chartingwealth.com. God bless. Take care from chartingwealth.com.